let's go ahead and kick it off here. So over the past 3 years, we have experienced a few really key events which has pushed forward the timeline here for precious metals and what is transpiring right now. So I would say there's three dominant themes. COVID hit right after this last conference in 2020 when we were speaking. And at that time, gold was already positioning itself for a run higher. We had ended this quantitative tightening, which was very, very brief at the time, and started to enter a quantitative easing almost phase. And then COVID hit, and then everything just went wild. They unleashed a quote-unquote monetary bazooka. Those were the actual words that Jay Powell used in his Sunday night press conference when he announced the cutting of interest rates down to zero and a massive unleashing of money printing, which has resulted in some major consequences. But it wasn't just the Federal Reserve, it was a global phenomenon. Central banks around the world increased their balance sheets and monetary supplies by double-digit growth, in many cases doubling their balance sheet sizes. And it's an incredible number in figures. The Federal Reserve created around $5 trillion new dollars, which is more than the cost of all of World War II in inflation-adjusted dollars. The money was monetized, debt was monetized, and it started flowing through the economy, which led us to our next problem. But these two charts are interesting because it shows the Federal Reserve growth and then also all the four major central banks, their asset growth. We're seeing not just in the US and Europe, but the Bank of Japan is now reflating and Bank of China now is reflating as the EU and ECB and the Fed is now contracting a bit. But overall, we have two different, we have central banks that are starting to ease again and others that are tightening. But overall, we have an explosive move by the central banks. And the consequence of this is inflation. You can't just create a bunch of money and expect no consequence from this without actual economic growth. So I found it very amazing that from 2020 on, there was this idea that inflation wasn't going to be a problem, that the central bankers were saying, well, inflation is going to be transitory and all that stuff. It was a joke. Anyone with even a basic knowledge of how economics and the money supply works knew that there was big issues coming down, and now we're starting to really deal with those issues, which includes major price inflation, not just in the US, but throughout the world. And in the United States, it's not as bad as you see in other places. I live in the Czech Republic right now. We have nearly 20% inflation rate. Just down south of us in Turkey, they're experiencing near 100% inflation rates. And all of this is getting people to wake up that they need to do something to protect themselves, their savings, and hide from this monetary storm. And at the same time as we're getting out of this whole COVID mess and dealing with this inflation problem, maybe even a more serious issue has started, and that's a war. A war that is not traditional in the sense that we've seen in the prior proxy wars around the world. This is becoming a very, very serious war in Europe, and it's expanding beyond its borders. Last night we saw an attack in Iran, which appears to be some drone attack, maybe by Israel, going after the drone factories in Iran. Conflict is growing, and it's not just a physical war. This is an economic, a financial, and monetary, and it's very, very serious. It is accelerating a lot of issues that have been brewing for many years. This is a very geopolitical event, and is dividing the world into two different camps. You have the West, the allies, allied in the West, and those in the East that are two different camps. They are now dividing more and more, and the lines are being drawn. This is going to lead to a lot of different shifts in the whole global economic monetary shakeup. And I think this is going to be a predominant theme in the years ahead as China, Russia, the BRICS nations are looking to find a way to deal with the power of the West and compete with them, and find a way to compete with one of the main powers that the West has, which is their currency. So this is really an incredible moment in time. We're seeing sides being drawn. We're seeing things that we haven't seen before. When the war started, the Central Bank of Russia, their dollar reserves were frozen. Half of them were frozen. which set off a warning sign to a lot of other central banks and countries. And naturally, they're looking for ways to protect themselves, because just like that, you can seize $300 billion of a central bank. Unless your country has physical cash, you are at the mercy of digital controls. And we see that with Russia, the $300 billion frozen. Now, China, what are they thinking about? What are other countries who are fearful of consequences of being on the wrong side of the West? What are they going to do? So now we're really seeing a huge shift. And gold plays a big role in all of this. So this goes back to a quote that JP Morgan said: "Gold is money, everything is credit." Fiat currency is nothing but an IOU note, one that has more and more risk growing with it. And gold is a unit of trust. It is something that isn't controlled centrally by one nation. Sure, there are some games involved in the futures market and pricing, but gold is very decentralized. It is held among billions of people around the world. The largest holders of gold are in India privately. Then you have central banks, and then other big holding countries, China, the Middle East, and so on. But in the end, gold competes with the king currency, king fiat, which is a king dollar. And there's a lot of questions about how gold will compete and other currencies against the dollar at this point. There has been a general de-dollarization over the past decades, where the dollar was very predominant, no real competition, but then the euro came around, and now we're seeing the yuan trying to compete. But it's still, they are not really great alternatives. The yuan, the Chinese, they have capital control issues. They haven't been able to really achieve more than 2.5–3% of forex reserves. The euro is a mess. The EU have all sorts of problems infighting, economic issues. So, the dollar, despite all the issues out there, it still isn't, it still hasn't hit the point where it's just going to collapse and implode. There are things out there that could trigger it, but at this point, there's still just a de-dollarization. But the de-dollarization has a big problem again. Where do you go? Where do you hide? You're not going to want to run into a lesser currency like the euro or yuan, are you? I don't think the trust is there. So gold becomes a natural a natural target when you want to get out of the dollar. You go into something which has a historic trust, a historic ability to store value, and you're reducing risk. Now that has been unleashed, and we're seeing a huge inflows into the gold market now. In fact, we've seen since 1967 the largest amount of central bank buying in the gold market. In the last quarter, there was World Gold Council believes that it was Russia and China mostly acquiring huge, vast amounts of gold. But there is significant physical, real demand for gold right now. And we're now getting to the point where the West, the Wall Street guys, are starting to look at gold. If you get the combination of the Eastern buyer who have India, China, Middle East, they've been buying and accumulating gold for years and years and years. But now if you get the West involved, you're going to get a real price competition, and the remaining inventories are starting to get tighter and tighter. And then at some point, when you get a very thin inventory, you're going to get a price explosion, because that's the only way to get more supply on this market. So gold is becoming extremely attractive again. The biggest question now is, a lot of people's mind, is what's going to happen with the Federal Reserve, central banks. Are they going to be pivoting? What is going to happen with the economy and so on? It's in my view, listening to the Fed, central bankers, they're very worried about inflation. They realize that they overdid it. They unleashed vast trillions and trillions and trillions of dollars into the global monetary system. It is something that is very psychological in nature too. So you need to break inflation. You need to break that psychology. And for the Federal Reserve, they have given indications that they're slowing down, and a lot of people are excited about a pivot. I'm in the camp that believes that the Fed is going to keep raising rates and hold it and wait until the inflation rate comes down. And we are seeing the inflation rate come down. The question is the inflation rate going to come down close to that 2% target of theirs, or is it going to come down and hold there? Is it going to embed? Is it going to start rising in several months? What is the Federal Reserve going to do then? There's some very difficult problems here, and this is something, When I came to Vancouver 20 some years ago to present here, I said, we're going to get to the point where there's a catch-22. You're going to have to either sacrifice the dollar or you're going to have to deal with the debt. And so now they're going to have to pick a side. I think with the Federal Reserve and their situation and their predicament, they're going to wait as long as possible until you start to get a real big crisis before they're going to react, and they'll react in a very similar manner. And that is really going to undermine the value of fiat currencies, and we'll see the next devaluation. Gold is really the only, when you look at the US dollar index, again, it looks relatively strong, has done relatively well, but don't look at the US dollar for what the real value of the dollar is. Gold is the real measuring stick here. Gold is rising in all currencies. We're seeing record gold prices hit in India, in Japan. It is a global gold market, and gold in US dollars now is also very close to making its breakout move. And when we see that, we're going to see a whole new influx of interest in the market, and gold is going to start to really kick off its next leg in this big bull phase. So I think one of the dominant themes then going for this year is the economy is weakening. The IMF, World Bank, they're all cutting their forecast. GDP growth was supposed to be around 3%, now it's down to 1.5%. Inflation is coming down, but it is not coming down fast or hard enough. So we're going to enter into a stagflationary environment. And for gold, of all the potential environments, stagflation is the most beneficial to attracting demand and capital inflows. And that'll not just be here in US or Canada. You're going to see it in Europe and other places in the world. So gold is just positioning itself perfectly. It had its initial run in 2020 when we were at around $1,300, $1,400, ran up to $2,000. So it initially reacted to all this money printing. But we've been through this very difficult phase over the last few years where we've seen the price not reacting to these high inflation rates. But I believe that is just delayed, and gold is preparing for its next big move. So at the moment, we saw the gold price capitulate a few months ago. We saw the silver price hit its lows first, and then the gold price hit its lows. And I got to say, gold bugs, they seem to be they don't seem to be all that optimistic yet. They seem to be quite stunned, because for the last few years, we've just got our hopes up, and then the market would correct. Another rally, another crash. So I think what we're seeing right now is a moment where gold bugs don't really realize or actually truly believe yet that this market can make its big move, and that we're in the process of a big breakout move. So the market in general is watching and waiting for its next correction. Sure, we can get a bit of a pullback, but the dominant theme now, the rules have changed. No longer do you want to sell rallies, you want to buy the pullbacks. You are not going to get that many opportunities to position yourself here into the mining stocks before they make their big move. Once people really realize and believe that this gold move is for real, you're going to see a huge rush into this market, and there will be some incredible moves, especially in the mining stocks, which have been absolutely beaten down despite the relatively high still precious metal prices. So we are at a point where we started the initial leg higher. Gold and silver bugs are trying to figure out what to do. The stocks are starting to move, and Wall Street's starting to pay attention. So my belief is you make your moves now. If you get a pullback here in the coming month or so weeks, it's a great time to start positioning. And you want to start buying before the crowd figures out and that greed and FOMO hits. There are risks in the market. I got to say, I'm in the belief that stagflation is coming, but we do know that the biggest threat out there is deflation. We have so much debt out there. We're looking at over $300 trillion in debt globally. It's in the government, it's in the federal level, in the state level, or the different districts. It's in the local levels, it's in the businesses, it's in the personal level. Debt is everywhere. And with higher rates, that's going to start triggering more and more problems. So we'll see what triggers. My fear is if this really starts to trigger into or cascades and the debt starts to collapse too fast and starts to take down some big companies or big institutions, you're going to start seeing big deflationary problems, and we could see a period where we could have some serious deflationary forces, and that could create some liquidity problems. You'll see the dollar briefly rise. You'll see the general markets have another aggressive sell-off as there's a rush for liquidity, dollar liquidity, and that can affect our market as well. So you may see short windows and periods where you do see a pretty aggressive reaction. But again, deflation is much more of a threat to the central bankers than inflation is. So if this scenario unleashes, central banks will react very aggressively. And then we're going to have even a bigger problem, again, because nothing ever gets resolved through any crisis. The same reaction. They're going to easy credit, print money, but they're going to have a lot more of a problem this time. The debt levels on the sovereign debt level, the numbers are just so high, it's unmanageable. We're seeing, the debt to GDP levels just 300, 350, 100% globally. You're seeing just this situation repeat itself in these cycles over so many decades. At one point, which I believe probably is the next cycle, this is not gonna be fixable. And then the day of reckoning arrives, and now we've got some real serious problems to deal with. I don't have few minutes left here, so I want to get into the gold and silver stocks, but do pay attention to capital controls and gold controls, because those are things that you need to prepare for now. When the government starts to have some real big issues, they're going to start restricting your ability to move money out of the country. They're going to start taxing you more. They're going to start stealing more of your wealth. If you have been prudent enough to save, you are going to become targets. So you need to start diversifying and look at other options, because these are very serious and they're very quick. It happens overnight. So look at it technically. The gold price here, you can see it capitulated. It's had an incredible move. We're reaching into a resistance area technically. We have the FOMC, a lot of economic data, a lot of ECB, a lot of central banks are meeting in the next week. So we got to watch what happens. We may get a pullback here, which would be an excellent opportunity for those looking to buy. But the long-term perspective, it's very clear that once you break 2,000, 2,100, you're going to have your big momentum breakout move. You're going to see all sorts of buying enter the market. You're going to see the algorithmic traders. You're going to see the momentum buyers. You're just going to see a rush into the gold market. You're going to see CNBC. You're going to see Wall Street Journal making headlines. And I should have actually put that headline there at the bottom of the gold market 3-4 months ago. Wall Street Journal was making fun of gold, saying gold is no longer a safe haven asset. Those are the signs you want to see at the bottom. Silver, $28 to $30 is a big technical barrier. Boy, did the market oversell itself and get so cheap that it started to drain inventory so aggressively that now you're starting to have inventory issues. Silver is in a structural deficit. Silver has incredible demand, industrial demand, the green energy side, and the key is investment. So if you're going to see a big move in gold and a rush out of dollars and euros and other currencies, silver, little tiny silver, breaks 30, you're going to see that thing really start moving, and that could really outperform gold in a big way. Gold and silver stocks, this is the HUI Gold Bugs Index. So you can see a shorter, multi-year view. We've had a nice bounce here. It's been a nice rally, so, short-term caution. But boy, if you look at the long-term view, a lot of these gold and silver stocks are 50, 60, 70, 80% from their highs just a few years ago. Miners are extremely cheap. I don't think you can go wrong there. Exploration stocks really haven't started moving yet. They will move after the miners move. And there's going to be a huge influx of capital into this sector. It has been starving for money. Exploration had a few windows where it got going, and then it collapsed. The sector needs capital to replenish reserves, to find new deposits. And the companies that do hold these deposits are sitting in a beautiful position for this next big move in the sector, where the producers are going to be looking for future deposits. Gold stocks, silver stocks versus the gold price, absolutely devastated. During a bear market, they underperform, but in the bull market, you're leveraged to the upside. So that's what you gotta. That's your opportunity now in the bull side. So here are several companies that I'm an investor in. Some of these companies are exhibiting at the conference here, and as I always say, the most important part of investing in a precious metals company is management. So please visit with the management. You can have all sorts of problems in the company. If you have good management, they can fix it. Fortuna Silver has been a company I was very excited in early 2020 when I was at this conference. It had about a 5x move before we started taking some profits, and then the pullback ensued, and they made a big transaction. They bought Rox Gold. They merged with them. An excellent assets in West Africa, which they are now producing gold mine number 5 later this mid-year. They are going to be producing a lot of gold at very cheap prices, and the price of the stock was just absolutely devastated and battered, and it's in the process of recovery. The next company I met at this conference, I think it was 2017, is Auber Silver. They didn't have the right management or capital at the time to push the project forward, but in 2019 and 2020, a new management team came forward, raised money, and started drilling and advancing Diablos down in Argentina. They recently made a new discovery. They're going to have an updated resource pre-feasibility study coming up. They also have another great gold copper project that they're drilling out. The company is very exciting. New Jersey Mining, this is now Idaho Strategic Resources. This is a company I met at a conference 20 years ago in the Coeur d'Alene district. They are now acquiring rare earth deposits and also a junior gold producer. The next company is one that I started buying the last few years, Aztec. They have 2 great projects. They recently consolidated a gold project in Mexico from Kootenai. Kootenai took a 10 million share position in the company. They have some really nice results coming out there. Kootenai Silver, also another great one, very leveraged to the silver price. Fortitude Gold, a U.S. Nevada producer, 24 million shares, 8% or so dividend yield, 40,000 ounces a year, not a big producer, but really good margins on those ounces. And then the last one here is Emerging Metals, the one I just started buying, gold, copper, a lot of projects in the U.S. and Quebec. They have Kennecott as a joint venture partner down in the New York Canyon project, $22.5 million for 75%. The company has $6-7 million market cap. Recently restructured. Looks like an exciting new discovery there just last week. Another porphyry hit. And then here about several companies here at the show with their booth numbers that I like. I would recommend meeting with them. So unfortunately, there's a lot to talk about. There's not a lot of time. If you would like to discuss some of these topics more with us, please come by booth number 503. I'll be there with Ben Richardson. And you can also find us on GoldSeek and SilverSeek.com, on Twitter at GoldSeek, and also on YouTube at GoldSeek TV. So thank you very much for your time. It's a pleasure to be back here. It's great to see everybody. And I look forward to seeing you again at this conference and next year.